Good evening, everyone. Welcome to Petron Live Sharing Class. It's my greatest honor to be able to share with everyone here. Hopefully, everyone in my class are able to pick up some knowledge from my sharing and able to fully understand the materials. I prepared for everyone. Today, there's a new topic. So, if you guys have some doubts about it, please read up again and also put the knowledge into practice. Continuous of learning and practice will definitely improve your trading skills, which will eventually leads to profitable trades. Okay, as I mentioned, today has a new topic. The topic will be oscillation and breakthrough. So the materials I picked to share with everyone, I believe is useful and is important for most of our friends. This technique is able to help everyone to have a clear understanding about how to read the charts. Besides sharing trading techniques, I am also here to scan for more profitable, high quality stocks, share market analysis, and guide everyone in all aspects of trading. So, I hope that in 2024, everyone can be more skillful and be more profitable. Thank you very much for your support. Okay, let's take a look at the contents we will be sharing for today. Today is 5 topics. Okay, let's move on to the first topic, which is market analysis. Today's market review and analysis. The India stock market opened significantly higher amidst a global rebound and started off strong. However, it eventually closed lower due to the selling pressure in the banking sector. The current trend has shifted from being strong to not so strong, and the expected adjustment has been interrupted, resulting in both major indices being in a state of high level volatility. Now, let's take a closer look at the specific situation in the market. As for the Nifty 50, okay, today the Nifty index opened significantly higher and is once rose in the morning but fell in the afternoon, driven by the banking stocks. And there was not even a decent rebound. It eventually closed near the lowest point. From a technical perspective, there is not much changes for now, as the candlestick chart from the previous trading days has completely encompassed today's candlestick chart. As I mentioned earlier, the index is currently forming a new oscillation range within the upward channel. Of course, this oscillation range is contained within the upward channel. As mentioned yesterday, whether it's an upward channel or sideways oscillation range, they both belong to strong categories. The only disadvantage is in terms of moving average. The current MA5 and MA10 have already formed a death cross, indicating that the previous strong upward trend has come to an end, and the market will enter a new rhythm. However, this does not mean that the market will change its directions. At the moment, the market can be considered to be in a short-term, long-term game. It's neither rising nor falls, and can only be considered to be a temporary balance. The market needs new guidance. In terms of strategy, it may be advisable to consider reducing holdings on rallies and then waiting for a new buying opportunity. Okay, let's move on to Sensex. Sensex daily chart. Okay, let's take a look at Sensex index. We have always said that Sensex index is slightly weaker, and it comes out from the lower support line of the channel. The Sensex index has completely started testing the lower support edge. From the Sensex chart, the crossing of the MA5 and MA10 has also formed. But the biggest test for this index in the future is the support row of the lower support line. Once it falls below this support line, it will enter a day level adjustment. However, one thing to note is that it is still necessary to verify the market of the Nifty index, which we have just learned about this study in Dow theory, called the indices needs to verify each other. Overall, whether there's an adjustment or not, the bull market in India's stock market will not change. Even there is an adjustment, it's just a rest or adjustment for the rapid rise in the market in the previous period. Okay, let's move on to the next topic. Macro analysis. Okay, macro analysis is all about data and news. Okay, the key point about reading up on news and data is how investors interpret the news or data. The same data or news may be viewed differently by different people. Analyzing micro fundamentals can help investors identify long-term investment opportunities and capture long-term trends in industries and the economy. In this sense, in our usual trading process, we not only need to pay attention to the stock themselves, but also micro fundamentals. Okay, let's see what I have prepared for everyone. Okay, this is a news for MSCI. Okay, MSCI India Emerging Markets Index has surged over the past 8 years, jumping from 7% to 17.1%. According to a recent Novamo report, with the continued participation of domestic institution investment, and the potential stable involvement of foreign investors, the FII, India's weight in the MSCI Emerging Markets Index could exceed 20% by early 2024. India's weight in the MSCI surpassed that of Taiwan, currently ranking second only to China, as you can see from the chart. This solidifies India's position as a promising investment choice in the emerging markets. A recent report indicates that India is poised to attract more foreign investments by 2024, while India's position in emerging market portfolio remains relatively light in the midterm. Its expanding scale is forging closer ties with global funds, favorable conditions such as expected political stability, rising investment cycles, and a peak in the US dollars are creating an ideal scenario for higher foreign inflows. After experiencing a significant outflow of 33 billion from February 2021 to January 2022, foreign portfolio investments, which is the FPI, flows have reversed, reaching the highest level in the past 11 years. India's increased weight in the emerging markets has driven an increase in funds inflow, with a natural weight in the benchmark MSCI emerging markets by rising by 3.5% points over the past 6 quarters. However, analysts indicate that India's relative position in large emerging markets active funds is currently closer to natural rather than significant above the average levels. Jeffries points out that The potential for FPI to occupy a larger position could therefore become a key driver of future funds flows. So, you see that from this article, even there is a short-term adjustment for the India stock market, the perspective of the super bull market is unlikely to be shaken. Okay, let's move on to the next article. The Indian government bonds may receive an additional boost in 2024, as Bloomberg has proposed to include them in its index for September 2024. According to Bloomberg Index Services Limited, which is BISL, during the Bloomberg 2023 Fixed Income Index Advisory Councils, feedback was received from the clients, and a consultation is being initiated to seek feedbacks on the proposal to include India's fully accessible route, which is FAR, bonds in the Bloomberg Emerging Markets Local Currency Index. Okay, the proposal suggests that India's government bonds will be phased in over 5 months starting from September 2024, with a 20% increase in the total market value of FAR category bonds each month. This process is expected to be completed by January 2025. The FAR category includes bonds that foreign investors can purchase without any restrictions. Bloomberg's proposal comes months after JP Morgan's announcement in September 2023 that India's government's bonds would be included in its government bonds index emerging market. Global Index Suite from June 2024. JP Morgan Index includes will occur over several months. The inclusion of the Indian government bonds its global indices is expected to bring in billions of dollars in foreign funds to the domestic sovereign debt market. Economists estimated that just including India's debt in JP Morgan's index could lead to a 24 billion inflow of funds. While the Indian government has welcomed the inclusion of Indian bonds in global bonds indices, it also remains cautious about the impact on the domestic market, ensuring the competitiveness of the Indian rupees in the face of foreign inflow. This indicates that India is becoming increasingly open and its international influence is growing. On the other hand, it is also beneficial for foreign investments to flow in, further promoting India's development, which has a positive effect. Okay, that's all for the analysis on the recent news. Okay, let's move on to the next topic. Okay, friends, today we are once again announcing some good news. In fact, that it should be said that everyone already know the good news. Okay, since we started trading on the UC limits, we have achieved a cumulative profit rate of 95%. This means that profit has already reached 95% of the original capital. And in the future, we will lead everyone to achieve even more profits. I hope that everyone can seize this opportunity. The speed at which we are making money is so fast that some friends are even hesitant to believe it. But it is true. Okay? However, the results are there for everyone to see. Some friends have even asked me, And today, some members are asking also, why are we providing this money-making opportunity to everyone for free? So let me say it again. Okay, let me share with everyone again. First of all, because our company, Petron Ventures, has just entered the Indian market, therefore our services are currently free for everyone. The reason we are providing free services at this stage is to allow more members in the India regions to experience our professionalism and services, and to let everyone feel the advantage and benefits of being associated with foreign capitals. Only in this way can the number of our members grow and our market share and asset management skill in India can also continue to grow. Furthermore, we have always believed that word of mouth is the best form of advertising. As long as our members continue to make profits, I believe that in the future, they will continue to choose Petron Ventures and they will share with their friends. Of course, later when the numbers of our members grows to a certain amount, we will also start charging a certain asset management service fee. After all companies needs income. Okay? This aspect will require notification from the headquarters, and nothing will be free forever. Moreover, at the moment, we are in the stage of competing with the asset management skill with Hong Kong and Japan. Only when everyone makes profits can our asset management skill grow. Only then can India have the chance to win in the competition of asset management skill. And only then can we have the opportunity to win the throne of the final Asia Pacific regional headquarters. As for this, it is also concerned my career and planning, and it concerns my future progression. Therefore, my team and I will continue to select high quality stocks, and I urge everyone to seize the current UC limit trading opportunities. I believe that as long as we work together, we can definitely achieve the final victory. Okay. As for the UC limit quotas, okay, regarding the issue of purchasing limits for stocks that have hit the UC limits, I would like to explain that more. Okay, and more members are participating in the trading of these stocks, while some may still not fully understand regarding to the purchasing limits. Okay, today I will take this opportunity during this live class to briefly explain it again with everyone. Firstly, it is important to understand that the number of outstanding shares of any listed company is limited. It is impossible for any listed company to supply an amount of unlimited shares. Okay? Cannot supply unlimited. Therefore, it is not possible for everyone to purchase an unlimited amount of shares, meaning that I would like to buy 1 million share or 10 million share. It's impossible. Okay? If a company's shares could be supplied without any limit, meaning there's no limit, you can buy any amount you want, then the price of the share will not rise. It's just like supply and demand. Okay? if the supply is so much, then no one will actually wants the share. Okay? Okay, another point to take note, it's not only our company, okay, that can apply for the purchasing limits for stocks that have the UC limit. Other asset management accounts or large funds and major institutions also have the same demands, but no company can supply an unlimited amount of these shares. Besides us, there's also other companies also applying for it. Okay, so although foreign asset management accounts can purchase stocks that have hit the UC limits, they are subjected to limit restrictions. As our number of members grows, there may be situation in the future where the daily purchase limits for this stock is not sufficient. Therefore, I encourage everyone to participate in the trading of this stock promptly every day to avoid missing out due to insufficient limits. And one more point is that from the purchasing limits for these stocks, we as a foreign asset management account, there is also a limit, a daily limit on the amount of funds that can be deposited into the account. Okay. Therefore, for those who want to trade and take this opportunity, you all should make an appointment with my assistant 1 day in advance. 1 day in advance, okay, to avoid being unable to deposit funds due to the daily limit being filled out. So I hope that everyone have a clear picture, okay, and the company has made arrangement, okay, to address the current shortage of limits. I will feedback this to the headquarters, and this is the current being finalized. I will provide further details tomorrow evening. I hope everyone can understand clearly after my explanation. Okay, so let's continue with our learning for tonight. Okay, for the rest of today, I will be talking more about oscillation and breakthrough. Okay, why do we continue to share this content with everyone today? There are three main reasons. Okay, number one is that in fact, many friends have studied this content before, but there are still many friends that are unclear. And they have been asking me to talk more about the technique and methods in this area. Personally, I believe that mastering the concept of breakthrough can greatly improve our profit-making ability. I personally also enjoy operating in market opportunities after a breakthrough. As for those experienced friends, know that the oscillation of a market is unavoidable. In our trading careers, because any trading instruments, regardless of which stock, spends the majority of its time in an oscillating market trend throughout the whole year. Even for a leading stock, the time spent in a smooth upward trend is limited, with the majority of the time still in an oscillating state. Therefore, how to deal with oscillating market trends is one of the standards to test a trader's technical abilities. As for point number 3, We all know that trading is difficult in oscillating markets, but not impossible. It is possible to make money in oscillating markets, although it requires a lot more efforts. In fact, the greater the profit often lies hidden behind the breakthrough of an oscillating market. This requires us to first be able to identify oscillating market trends and be able to profit from them. And secondly, to seize the substantial profits after oscillation. Okay, let's move on. Give you all a clearer picture of it. Okay, oscillation and breakthrough. Okay, what kind of market is an oscillation market? So, most of us knows that the market in a complex system composed of various trading entities. Among them, trend trading is the soul and core of trading operations. If you can adapt to major trends, trading will become a lot simpler, and making money will also become easy. Regarding trends, we have shared a lot of contents with everyone before, so its importance doesn't need to be repeated. Okay, I will not touch on that part anymore. In contrast to clear upward downward trends, the market often operates in a directional uncertain states, which is also very common. This common state of market uncertainty is called oscillating market, or another common name is called ranging market or fluctuating market. Okay? Okay, in our daily trading life, we often come across or talk about word oscillation or fluctuation. And many friends have become very familiar with it. However, have we ever paid attention to the differences between the same oscillating market conditions? What are the differences between them? What are the different types of oscillation patterns? In the practical trading process, we often encounter several major types of oscillation patterns, including rectangular oscillation, flag oscillation, triangular oscillation, ridge oscillation, diamond oscillation, and so on and so forth. Okay. Among them, rectangular oscillation, flag oscillation, and triangular oscillation are the most easiest to recognize. And the character of this form is easy. Therefore, today we'll just only focus on these forms. As for the rest, the ridge oscillation and diamond oscillation, their occurrence probability is relatively small, and their trading price are much lower. So we will not delve into these two patterns too much for today. So please pay attention to the things I'm going to share on the next few slides, okay, which is one of the important part of this topic. Okay, next, I believe many friends know that the financial market, no matter what kind of trading variety, the technical patterns presents are most in oscillating market for the majority of the time. As professional traders or investors, we cannot ignore the oscillating market. So, we also need to learn how to profit from it. So, how can we make a profit from oscillating market? It splits into two parts. To understand and deal with the issue, okay, has two parts. First, We know that even an oscillating market, there are often some price patterns such as rectangular, triangle, flag, wedges, and etc. Okay, all of which belongs to oscillating patterns. In the process of generating these patterns, the principle of profit is to buy low and sell high. Of course, this is only a principle. There are still many specific trading methods which require us to continue accumulate experience in future trading processes. Of course, I will also share some with you. It is important to note that these profit methods generally result in relatively small profit margin per trade, which can continuously expand by repeated trades. Okay, as you do a few more times of this kind of trade, your profits will increase. Okay. Secondly, is to predict the trend direction after the oscillating market and seize the opportunity of profits. The oscillating market is a correction or adjustment of the market. So, after the oscillating market, once the market chooses a direction, there will be a large upward or downward trend. Judging the market trend and seizing the buying point can capture a large trend and thus also the profits. Like the classic oscillating patterns I just mentioned, they mostly act as a continuous pattern for the majority of the time, meaning they generate indicates that the price will continue same as the previous trend. This is more advantageous for us to capture trading opportunities. Next, I will specifically talk to everyone about this classic continuous pattern and how to use these patterns to our profit. Okay, let's move on to the different patterns which will give everyone a clearer picture. Okay, first, rectangular oscillation pattern, or we call it rectangular pattern, which is very common and is also very important. Why is that so? Okay, this pattern is easy to identify, but there is a large profit potential after the rectangular breakout. Okay, it's easy and easy have a large potential. So what is a triangle pattern? The repeat upwards and downward movement within the range of a parallel upper resistance and lower resistance lines are called rectangular. It becomes clearer when you take a look at the diagram. Okay, this diagram you can see. Okay, so these two lines they make a rectangular. In addition, after the price breakout of this rectangular, there is a high probability of continuing the same trend as before this pattern. Okay, so meaning that this pattern is this way, then they move this way, rectangular, and continue the previous pattern. Okay. If the trend before the rectangular pattern was downward, then it's likely to break downwards. Okay. Therefore, this type of pattern is also known as continuational pattern. So there are two types of rectangular patterns. One is called bullish rectangular patterns, and one is called bearish rectangular patterns. The distinctions between bullish and bearish depends mainly on the direction of the trend before this pattern. Of course, we are talking about stock trading here, so I only share with the bullish triangular pattern. Let's take a look at the next slide. We just mentioned that there are two trading opportunities in an oscillating pattern. One is buying low and selling high within the oscillation range. And the other is following the trend after the pattern breakthrough. The rectangular oscillation pattern is the easiest to recognize among all oscillation patterns. Okay, as long as the oscillation range is large enough, the profit opportunities provided before the patterns are very profitable and easy to capture. So I want to emphasize it again that two profit opportunities for this pattern. If you still don't understand, it's okay. We will just use the graphic, okay, to show everyone where is the two profit opportunities. Okay, on this graph, it will be a clearer picture for everyone. Okay, let's take a look at the graph. So, what can we see in this graph? We can see a very obvious rectangular oscillation, okay, which is this. It's so big, okay? The price first rises, then begins to oscillate. And we draw the resistance line and support line. Okay, I believe everyone should know how to draw the resistance line and the support line. Okay, we can see that a clear rectangular oscillation has formed. After the box oscillation, the price generally continues its original trend. The trading opportunities are divided into two types. Okay. Everyone, please take note that the buying and selling opportunities that are marked, okay, you can see, are marked that this is a buy, this is a sell, and this is a buy. Okay. I have also a question for everyone. Why did I mark the buying and selling opportunities in these two places? Okay, think about it. It's opportunity for breakthrough of this rectangular, which I have also clearly marked, okay, which is the last one. Okay, I will use an example to share this with everyone. The main purpose is to let everyone remember this type of trading opportunities. There is no need for everyone to be concerned about which stock to use or I use, okay, to share with everyone. So let's move on. I hope this is a clear slide for everyone. Okay, just now I just shared rectangular oscillation. Next will be flag oscillation, okay, which is also a classical and very common price pattern. Okay, is often we can see in our daily tradings. So the question is, what is a flag oscillation? Okay, the flag pattern is a pattern that indicates the continuation of a main trend. Okay, it looks like a flag. Okay, the flagpole and the flag. Okay, so it represent a flagpole shape. Okay, then it's correct within the price channel. Okay, within this channel, and then breaks through the edge of the flag and move in the direction of the previous trend. Conversely, the flag pattern indicates that the market is taking a rest after a strong trend. It should tend to slope opposite to the previous trend, preparing for the continuation of the main trend. The flag pattern is usually much shorter than the previous trend. Okay, later you can take a look at the example. Okay, let's move on first. Okay, similarly, there are two types of flag patterns. Okay, one is bullish and one is bearish. So as for today, however, we will only be sharing information about the bullish flag pattern. The bullish flag pattern is also known as a bull flag, okay, or they call it a bullish flag. In the flag position, the price will correct within a descending trend, okay, descending trend channel with two parallel support and resistance line. Same, okay, I believe everyone should know how to draw. When the price breaks through the resistance line, buying pressure will strengthen once again and begin to soar, meaning pushing the price up again. Okay, let's take a look at the next slide for the graph. Okay, comparing to the rectangular pattern, the flag pattern oscillation is relatively less. It's not as long as the one just now you see. Okay, rectangular is longer, right? So we have this chart. Okay, I use a downward sloping channel and an upward trend on the left to form a flag oscillation pattern. Meaning, this is the pole and this is the flag. Okay, I use this to form it. A large outward candlestick broke through the flag resistance line and the price continued its previous upward trend. Okay, you can see that here there's a big candlestick. Okay, we break through the resistance. Okay, and the trend continue as the same as in front. In terms of sizing trading opportunities, as I mentioned before, there's two kinds of traders, conservative and aggressive. Okay, as for the conservative traders, can wait for a pullback after the breakthrough to buy again. Okay, of course, conservative traders may also miss this opportunity. Okay, because they wait, then they might miss the opportunity. But as for aggressive traders, can buy before the close of the breakthrough day. Okay? And even if the price has a small pullback afterwards, it does not affect the position. The stop loss level is below the lowest price of the breakthrough day. Okay? Meaning over here. Okay? Let's continue to the next slide. In practical use of the flag pattern, what else should we pay attention to? Okay, there's some precautions. Okay, I write down in 5 points. Okay, for point number 1, the flag patterns indicates the continuation of the main trend. The previous pattern should be a strong upward or downward trend. If the previous trend is not strong, I repeat, it's not strong, the accuracy of the using this model for judging or will decrease slightly. Okay, it's not really a lot, but slightly. A good signal is indicated by the model having a slope in the selection of two parallel lines. Importantly, the slope should be opposite to the direction of the flagpole. For point number 3, the period in which the pattern forms is also an important factor in determining its accuracy. As for point number 4, the trading volume usually tends to weaken during the formation of the pattern and increase when the price breaks through the support and resistance. For last point, point number 5, Combining several other technical indicators will improve the accuracy of the model. These points that I just mentioned are actually based on my own experience. The more you practice and summarize your experience in practical exercise, the higher the accuracy will be in making specific judgments. Okay, let's continue with the next oscillation. Okay, this is a triangle. The triangle pattern, also known as specific types such as symmetrical triangle patterns, ascending triangle patterns, descending triangle patterns, okay, and so on and so forth. Okay, today we only share or touch on the usage of the ascending triangle patterns. Okay, the ascending triangle patterns indicates the continuation of an upward trend. So it usually occurs after a strong upward trend. At the time when the price no longer makes new highs but move within the horizontal line, which is a resistance, okay, and the upward slope trend line, which is a support, okay, a signal for a triangle breakout will occur. When the price moves to the end of the pattern, the trading volume will increase. Subsequently, it will break through the resistance line and continue to rise with the trend. Okay, let's take a look at some examples. Okay, let's take a look at this chart. Okay, the price first experienced an upward trend, then enter a triangular oscillation. By connecting the resistance line and the support line, we can clearly see that the support line is horizontal and the resistance line is sloping upwards. At the same time, the oscillation range is continuously narrowing, forming a triangle. This is called a bullish triangle oscillation. When a bullish triangle oscillation appears and the price breaks through the resistance line, there is generally a bullish market trend. This is also a great opportunity for us to make profit from trading. I also have marked on this chart so that everyone can understand where is the buying opportunity. Okay, you can see from here. Okay. Okay, let's move on to the precaution. Okay, precaution also have 5 points. Okay, in addition, when using this triangle oscillation to determine the price trend, what should we be taking note of? Okay, point number 1, the trading volume of the triangular pattern will gradually increase at the end of the pattern because it's going to start to rise, right? To break through. That's why the volume will increase. For point number 2, for the triangular pattern, the two trend line will eventually converge to a point which is clearly different from the two trend line of a flat pattern. Okay. For point number 3, the period in which the pattern forms is also one of the important factors determining accuracy. And for point number 4, the triangular pattern can appear in any time frame, whether it's M5, H1, H4, D1, or etc. Okay. Okay. And for point number 5, combining several technical indicators will improve the model's accuracy. So, okay, I'll just explain to everyone on some classical oscillation patterns in the market. And the value of oscillation pattern can be divided into two aspects. One, the trading opportunities within the oscillation range, with rectangulars being the best. Okay. Number two, the trading value after breaking the oscillation pattern, which is more important. Okay, which is a lot more important. It is worth mentioning that the patterns shared today are quite classical and have great practical values. Of course, there are far more than these only three types of oscillation patterns. There are many more, okay, in the market. But for those who are interested, okay, can study when you have your free time, okay. Additionally, today we will only share these bullish patterns, okay, because we are in the bullish stock market. So we are currently do not need to share anything about the bearish pattern. So let's move on to the last topic of the day. Okay, for quality stock analysts, I will briefly discuss that the stocks recommended to everyone earlier. Currently, both Saregama and Infosys, both stocks are experiencing some small losses, and they have been held for quite some time. Okay, I would say quite long already. If any friends still holding these stocks, please sell them tomorrow. Okay, we will directly engage in trading for stocks with UC limits. As you can see, our recent trading in UC limit stocks are very and highly profitable, with a cumulative profit margin up to 95%. As for the losses incurred by these two stocks, I believe we will soon be able to recover from and lead everyone to more profits. For friends who have incurred losses, in future when purchasing of UC limit stocks, I will try to allocate more quotas to everyone. Okay? Okay, friends. So today my sharing class will end here. Thank you for joining my class and giving me your support. We will continue our live class on this coming Thursday, 11th of January 2024 at 8 p.m. I hope to see everyone here. Thank you once again and have a good night.